Good morning, everyone. Welcome to Office Adda 24/7. My name is Niharika Valia Bhatnagar, and I'm with you with the area of ABFM. I hope you have reviewed our previous marathon as well. In the last marathon, I have taken questions of Module B, and I think I'll be continuing with the Module B as well as then I'll be looking forward to Module C and D as well. So I hope you are reviewing my classes every single day. Every single day we are coming up with one or the other thing regarding ABFM. So since the last 2 weeks are left now, so let's look forward to it, everyone. Chaliye, then let's continue. Okay. So here comes the first question, that is private equity and venture capital. When we're talking about private equity and venture capital, what is the primary regulatory authority overseeing the private equity funds in India? RBI, Ministry of Finance, then Securities and Exchange Board of India, or Ministry of Corporate Affairs. When we talk about the primary regulatory body which oversees the private equity funds, every single kind of funding, you can say securities are always taken care by, the basic is always taken care by Securities and Exchange Board of India. SEBI does that. It is SEBI. ठीक है? After this, here comes the next question. That is, Securities and Exchange Board of India is responsible for private equity. See, this organization is taking care of the public offers as well. Whenever initial public offers are made by the companies, their IPOs, they are all managed by and regulated by SEBI, because anything that is listed on the exchange, it is SEBI who takes care of it, that whatever is visible to the people there, the companies are genuine, they are not doing anything which is bad for the world altogether, right? Because so many people are putting their money into it. Chaliye, then let's continue further. Okay. Here comes the next question. According to SEBI, or Alternative Investment Funds Regulations of 2012, they talk about what is the definition of alternate investment fund. It is an investment fund incorporated outside India, and any privately pooled investment vehicle established or incorporated in India, or any mutual fund regulated in India. Good morning. Or any fund exclusively for retail investors. What is it for? What is it for, everyone? Private equity. See, SEBI has been taking care of alternate investment fund and all of these things in, I would say, they've been taking care of all these things because ultimately, the entire market is dependent upon the various ways through which you raise money. And if the ways are not sorted, then what will happen? The entire market would be hit, and the reason why SEBI was incorporated would be completely violated. So when we talk about SEBI now, SEBI in alternate investment funds is basically any privately pooled investments. Private means selected people taking care of it. Vehicle established or incorporated in India. This is completely incorporated in India, and this is something that I choose the people to whom I want to give the shares to. Okay? I will choose the people to whom I want to give the shares. Then comes the next point. Any privately pooled investment vehicle. The next point is regarding the category 1. Acha, in terms of the AIF na alternate investment fund, there are three categories overall. Which of the following is not category 1 AIF? Venture capital, SME or small medium enterprises funds, or real estate funds or infrastructure funds, which are not category 1. There are multiple categories, everyone. So which one of the following is not category 1? Venture capital is category 1. B, Sabiha ma'am. Okay. Let's look at the answer, please. Venture capital funds, SMEs or small medium enterprises, or real estate. The answer is actually C. The answer is real estate funds. Real estate funds are not included in the category 1 AIF. It is real estate funds. Okay. Next question. This question is regarding the main goal of establishing the SEBI AIF regulations. Everybody? Okay. I think now it would be visible. What is the main goal of SEBI Alternate Investment Fund Regulations 2012? Increasing the government control over the investment funds? No. SEBI doesn't work for increasing the government control. Then the second point is increasing the accountability of market participants. Ma'am, in this area, I'll be covering the entire MCQ of all these categories. So you will be able to get the entire detail there. Okay? And increasing the accountability of the market participants and market stability, nullifying all the previous regulations on investment funds or promoting speculative trading in the market. When we're talking about the main goal of SEBI, the main goal of SEBI would be what? SEBI does see AIF doesn't work towards the government control. One thing is that the government control cannot be increased. They are now moving towards the capitalized market, the market which is run by the demand and supply. Then increasing the accountability. See, this can be done because now this particular area is left only towards the people who are participating in the market. So when it is talking about the people who are participating in the market now, then they are totally depending on the market participants to run their market. That means the demand and the supply is based upon this. Nullifying all the previous regulations on investment funds and promoting speculative trading in the market. So answer is B. That is increasing the accountability of the market participants and market stability. This is a little longer question on again SEBI there. The introduction of SEBI, the Alternate Investment Fund Regulations 2012, aimed to establish a standardized framework for the governance of the private pools of funds. It is for the private pools of funds, or this framework was introduced to encourage the efficient distribution of funds in the market. Are both the assertion and reasoning true and correct, or it is any of them has a problem? That means both assertion and reasoning are true. Reasoning is correct explanation for assertion. Both assertion and reasoning are true, but it is not the correct explanation of assertion. Assertion is true or assertion is false. What would be the answer according to you? What would be the answer in this case? We are talking about AIF. We have just talked about it. It was established to standardize the framework of for the governance. See, this is what I was talking about. It doesn't work for government, but it works for governance. Governance is basically maintenance of this piece there. of private pools of funds. This framework was introduced to encourage the efficient distribution of funds. This is what, in terms of the working, they understand that they cannot work with the government thing. They have to leave things on the market, the demand and the supply. So basically, what they are doing is introducing the self-regulation in this area. That people are themselves working in that manner, that the chances of the frauds or any other misconceptions regarding this working is eliminated altogether. Here comes the next point, everyone, that is angel funds. Angel funds and venture capital fund, they are not the same thing. What's the difference between the two, everyone? Correct, ma'am. Very good. Then comes the next question. It says the angel funds are subcategory. It is not the main, but angel funds are the subcategory of venture capital fund under category 1 AIF. That is, reason is angel investors are restricted to investing a maximum amount of 25 lakh in the angel funds for a period of 3 years. So are they putting up maximum 25 lakhs in terms of period of 3 years, or assertion is reasoning is true, assertion is true, or reasoning is false? What is the correct answer? Both are true and reasoning is correct. Both are true and but reasoning is not correct. Assertion is true, reason is false, assertion is false, and reason is true. What would be the answer? When we talk about AIF category 1, angel capital. Angel funds are those funds which people are helping to for the business to grow, but these are not going to take over the business even if you grow into something really cool. So basically, these people are okay investors. I won't say they're very big or very small. They're good investors. They can invest good amount of money. But the restriction is there up to 25 lakh rupees. Along with that, it gets normally up to a period of 3 to 5 years max. So when we talk about the AIF subcategory of venture capital fund in under category 1, in this area they're clearly stating this part, and this is the correct answer too. So it is A only in this area as well. It is both assertion and reasoning are true, and reasoning is a correct explanation for assertion. As I told you, in the upcoming questions, I'm going to talk about all the um, AIF categories too. What is the primary criterion for an individual to qualify as an investor? Correct, Sabiha ma'am? What is the primary criterion for an individual to qualify as an angel investor in an angel fund? Minimum 10 lakh of capital, net tangible assets should be of at least 2 cr, or 2 cr excluding the value of the principal's residence, 2 crores, that is early stage investment experience at least of 5 years, or entrepreneurial experience in any industry. What would be the primary criterion for an individual to qualify as an angel fund investor? Angel funds, these people are not interested in your business at all. They are there to help you. Done? When we talk about this area, the correct answer would be B. It is for net, their money should be up to 2 CR. If you're putting 25 lakh into someone else's business minimum, then obviously you should be having money now. So the net tangible assets of at least 2 CR should be there. Correct, Sabiha ma'am? That is excluding the value of the principal residence. Matlab, except your residence, you should be have at least 2 CR in your pocket. Even to do charity, you should have enough money now, right? Then according to the regulation of 21R, how is private equity fund defined under SEBI regulations 2012? It is a fund which is primarily investing in real estate, or fund investing in a diversified portfolio of securities, or fund primarily investing in equity or equity linked investments, or a fund specializing in commodity market investments. When we talk about 2-1R na, how is the private equity fund defined? The private equity fund can be defined as the equity linked instruments. It is basically investing in pure equity only, investing in equity or equity linked instruments only. We are not investing in anything else. We are just investing in these. In this case, the correct answer is C. That is a fund primarily investing in equity and equity linked instruments. Then here comes the next question. This is something that we have just talked about. What is the maximum period for an angel fund can accept an investment of not less than 25 CR for an angel investor? 1 year, 2 year, 3 year, or 5 years? We have just done this concept in some other question. What is the maximum period, everyone? Go ahead and answer. Everybody who's there in the class, please go ahead and share the session. And please like the session as well and share it among your peers. And if you haven't subscribed to the channel, first of all, subscribe the channel as well. And by the end of the session, I will also be telling you about our sale, which has just started. So you can avail the maximum benefits out of it. In this case, the correct answer is C, everyone. We have just talked about category 1 now, AIF, angel funds. It is 3 years. Okay. Next question. Which regulatory body issues circulars to improve the transparency and governing standards of AIF in India? RBI, Ministry of Corporate Affairs, Securities, or MCA? Who issues the circulars? We talked about the regulatory body. Now we're talking about the circulars. The circulars which are introduced in terms of transparency. RBI, MCA, Ministry of Finance, or Securities and Exchange Board of India? Correct, Kavita ma'am. It is 3 years. Very good. In this case, the correct answer is SEBI. Securities and Exchange Board of India. Okay. Again, issued by SEBI and even carried forward by SEBI again. Securities and Exchange Board of India. Next question. In context of private placement as per section 42, how many individuals can offer or invitation be extended to, excluding qualified institutional buyers and eligible employees? 100, 150, 200, or there is no limit? As per section 42. See, when we talk about the individuals to which we can actually send an offer or invitation be extended to, it can be done up to 200 individuals. The answer is 200. Or excluding the qualified, we are not even including the institutional investors or the eligible employees, because eligible employees gets ESOPs, na, employee stock option plans. So we are keeping them out of it. So when keeping them out of it, the correct answer would be up to 200 individuals. Answer is C, everyone. Very good, Kavita ma'am. Everybody, please participate in this particular live class. Chale. Then comes the next question. Why are private equity funds subjected to less stringent compliance compared to public offerings? Private equity funds are exempt from regulatory oversight, or private equity transactions involve limited number of investors. Private equity investors are made in publicly traded companies, or private equity are not allowed to raise funds from the general public. Why are private equity funds less stringent? See, when we're talking about IPO or FPO, we are introducing money through SEBI. At that point of time, things are very, very strict. Why does it become easy when you have private equity? The point is, when we are having public issue, so many people are getting involved, right? So many people would be buying the shares. There is no limit to it. Public company, public dealings, share buying and selling can be done with n number of people. But the point is, when we are having private equity, we know the counted number of people are involved. When counted number of people are involved, then the answer would be B. That's why. The answer is the private equity transactions involve only a limited number of investors. So there is never a problem. Okay? So that's it for the day. But before I end my session, everybody, I hope you have reviewed our courses yet. If you haven't, then perfect timing. Our organization has got the particular sale going on. So what you have to do is go on to the area of JIB and CIB and look out for CIB November 2023 attempt. So this is where CIB pack is available. Our revision packs are available, and you can buy it at the lowest cost right now. You can just use the code Y541 and get it at the maximum discount for 2999.80. It is available at this point of time. And if you're looking forward to it, then you can also check it out that this is our revision batch for English medium. And if you're preparing and thinking for long term, you're not preparing for this particular attempt, but preparing for next attempt, then there are for CIB there, June 2024 batches are there as well. You can take up the Mahapack, which includes our English medium as well as bilingual both classes. It includes the current batches, the future batches, and the past batches. Everything is there. You don't have to buy anything else if you buy this particular Mahapack. Everything is here. If you're looking forward to it, you can buy it for double validity. See, you buy it for 6 months, you get 12, and it is available for 6499. That means less than, if I look forward towards 12 months, less than 500 rupees per month. So check it out. You can use the code Y541 to get 81% discount here. So hurry up and avail this particular discount now. Thank you, everyone. We'll be meeting tomorrow.